Listen closely. Do you hear that? It's not the sound of a factory floor where honest men forge steel into machines. It's not the rhythmic thud of a harvest where the earth rewards those who plant and wait. No, it's something far more sinister, far more consequential. It's the scratch of a nib against parchment in Washington, a single stroke of a pen, a signature that will ripple through the lives of millions who will never know what hit them. They call it monetary stimulus. They dress it up in the language of economics, wrap it in the authority of institutions, and present it as salvation. But I have another name for it. I call it the theft of time. It's January 2026. Outside your window, the world looks deceptively the same. The same cars drive past. The same neighbors wave hello. The same coffee shops serve the same lattes. But in the mahogany halls where power resides, in the marble corridors of the Eccles building, in the Oval Office, in the back rooms where deals are made, a war is being waged. A war that will determine whether your savings retain their meaning or dissolve into worthless digits on a screen. On one side stands the cold, gray mathematics of the Federal Reserve, Jerome Powell, a man who has spent his career navigating the treacherous waters between political pressure and economic reality, now finds himself in an unprecedented position. The Justice Department, weaponized, politicized, transformed into a tool of coercion, has threatened criminal charges against the chairman of the Federal Reserve for the crime of refusing to obey, for the crime of setting interest rates based on economic data rather than presidential tweets, for the crime of independence. On the other side stands the populist rage of a king who wants the numbers to lie to you, a man who has called the Fed Chair a numbskull and a stubborn mule for maintaining rates between 3.5% and 3.75% when the king demands 1%. 1%. In an economy with persistent inflation, in a world where the laws of economics have not been repealed, no matter how many executive orders are signed. I've seen this before. Not personally, I am not that old, but I have read the ledgers, I have studied the history. Benjamin Graham saw it in the 1930s. He watched as men in suits tried to legislate gravity out of existence. He watched as politicians promised prosperity through the printing press. He watched as the bill came due, paid in the currency of human suffering. They want interest rates at 1%, while inflation gnaws at your purchasing power like a rat in the grain silo. They want the sugar high today, the soaring stock prices, the cheap mortgages, the illusion of wealth, even if it means a cardiac arrest for the economy tomorrow. Even if it means your children inherit a currency that buys half of what it buys today. Even if it means the careful savings of a lifetime evaporate in a fog of monetary manipulation. As a provider, as the one who keeps the lights on and the fortress guarded, as the one whose family looks to you for security in an insecure world, you need to understand what is happening. You need to see through the fog of political theater. You need to know when politics tries to control the central bank, when the independence that has anchored the global financial system for decades is threatened with criminal prosecution, someone is set up as the mark. And if you don't know who the mark is, if you're sitting there watching the news and thinking this is just another political squabble that doesn't affect you, then I have difficult news. It's you. You are the mark. Your savings are the chips on the table, and the game is rigged. Mr. Market is currently having a manic episode. We've seen this before. The irrational exuberance, the green candles shooting toward heaven, the talking heads on television explaining why this time is different. But this time, Mr. Market has been joined by a new partner in his madness. Mr. Politician has entered the casino. Why do they want to canistar the interest rates? Why this obsession, this pathological, almost religious fervor with forcing them down? Why threaten criminal charges against a Fed chair? Why transform the Department of Justice into an instrument of monetary policy? The answer is simple, and it is ancient. Humans are biologically incapable of valuing the future over the present. We are dopamine-driven primates wearing suits. We evolved on the savannah, where immediate gratification meant survival, and long-term planning was a luxury reserved for those who lived past 30. Our brains are wired to grab the marshmallow now, to eat the seed corn today, to mortgage tomorrow for a moment of pleasure in the present. Politicians understand this. They exploit it. They know that a voter whose 401k is rising will forgive almost anything. They know that the pain of inflation is diffuse and gradual, like a slow poison, while the pleasure of rising asset prices is immediate and intoxicating. Lowering interest rates by political decree is like injecting adrenaline into a dying horse. For a few miles, it looks like a champion. The muscles ripple with false vigor. The stride lengthens. The crowd cheers. The stock market votes for it with a green candle that makes the evening news. The speculators, those vultures of the short term, those parasites who produce nothing but profit from volatility, scream for more. They see the price on their screens, but they are constitutionally incapable of seeing the value underneath. But wait, the speculator says, scrolling through his brokerage app at 2 a.m. If the president fires Powell and installs a loyalist, my crypto and my tech stocks will moon. I'll be rich. Yes, they will moon, for a while, and so will the price of the bread you need to feed your children. So will the cost of the lumber you need to repair your roof. So will the rent your tenants pay, which sounds good until you realize your own costs have risen faster. So will the price of everything, because when you flood an economy with cheap money, you don't create wealth, you dilute it. You don't lift all boats, you raise the water level, while the boats stay exactly where they are. In Benjamin Graham's world, the world of cold mathematics and honest accounting, interest is the price of time. It is the compensation the universe demands for waiting. It is the fundamental exchange rate between the present and the future. When you manipulate the price of time, you don't outsmart the universe. You break the fundamental law of economic reality. You are telling the market that tomorrow doesn't matter. You are telling savers that their discipline is for fools. You are encouraging what the Austrian economists called malinvestment,
the building of glass towers where we need humble shelters, the funding of zombie companies that survive only because credit is free, the creation of an economy that looks prosperous on the surface while rotting from within. The speculators love this. They thrive in distortion, but the providers, the men and women who build real things, who save real money, who plan real futures, we are the ones who pay the bill.
Let's put away the rhetoric. Let's close the newspaper. Let's look at the ledger. Benjamin Graham gave us the formula, and it doesn't care about your political affiliation. It doesn't care whether you voted red or blue. It doesn't care about tweets or threats or criminal investigations. It doesn't care about the DOJ probing Fed Chair Powell. It only cares about the numbers. V equals EPS times 8.5 plus 2G times 4.4 divided by Y. This is Graham's revised formula for intrinsic value, updated in 1974 to account for the reality that interest rates matter. Let me decode it step by step. V is intrinsic value, what a company is actually worth, stripped of hype and speculation. EPS is earnings per share, the real profits, the actual cash flow. 8.5 is base PE ratio for a no-growth company, the absolute floor. G is expected annual growth rate, a reasonable projection, not dreams. 4.4 is AAA corporate bond yield in Graham's era, his normal baseline. Y, look at that Y, the current yield on high-grade corporate bonds. That's the anchor of reality. Here's the critical point. When the president demands rates by decree, interest rates set by political fiat rather than economic data, like Trump's calls for 1% rates or capping credit cards at 10%, he's trying to force Y down artificially. Watch what happens to the formula. Y shrinks, denominator shrinks. V appears to skyrocket. It's a magic trick. It's an accounting illusion. A mediocre company suddenly looks like Apple. An overpriced stock looks cheap. Your portfolio statement screams winning while you're standing on quicksand. But here's the catch, buried in footnotes nobody reads. The market is a voting machine in the short run, sentiment, tweets, political theater. A weighing machine in the long run, reality. And reality cannot be decreed. When rates are artificially suppressed by political pressure, DOJ threats, or fiat caps, the currency rots from within. In 2026, we're witnessing splintering. Canada hikes rates for sanity. Japan deals with decades of experimentation. The U.S. flirts with fiscal dominance. The Fed as Treasury servant, funding deficits over price stability. Fiscal dominance equals higher, volatile inflation. Central banks can't hike because that spikes government debt costs. Expectations on anchor. Households expect inflation as normal. Stabilizing prices becomes exponentially harder. If you plan retirement on manipulated Y, you're building on quicksand. Decisions based on lies. The intelligent investor,
A Graham disciple, a serious provider, adjusts for the lie. Official 2% by decree? Calculate at 5% for safety. Assume manipulation fails. Build your own margin of safety. Official numbers can't be trusted anymore. Because when rates by decree fail, and they always fail eventually, the reversion isn't a dip to buy, it's a landslide. Years of distortion crash in weeks. Those betting on manipulated numbers discover too late their fortress was sand.
There is a certain stench to this era. You can smell it if you know what to look for. It's the smell of status-seeking, dressed up as investing. It's the perfume of leverage, masquerading as genius. It's the cologne of speculation, pretending to be strategy. The speculator loves the cañetada because it fuels his lifestyle. He wants the low rate, craves it, demands it, votes for it, because low rates allow him to leverage himself to the hilt. He can borrow at 3% to buy assets that yield 5% and convince himself he's a financial wizard. He can take out a mortgage he can barely afford because the monthly payment looks manageable, ignoring the mountain of principal that never shrinks. He wants to buy things he doesn't need, with money he doesn't have, to impress people he doesn't like. His Instagram is a monument to consumption. His net worth is a hologram. The speculator sees the headlines about Trump threatening Powell and thinks, good, fire him, put someone in who will cut rates, my portfolio will moon. He doesn't understand, or doesn't care, that he is cheering for the debasement of his own labor. Every hour he has worked, every dollar he has saved, every sacrifice he has made, all of it denominated in a currency that is being systematically hollowed out to fund his short-term gains. The investor, however, is a different breed entirely. We are the auditors of reality. We do not cheer for manipulation. We do not pray for distortion. We do not confuse price with value. The speculator sees a rate cut and buys a call option, leveraging his bet on momentum. The investor sees a rate cut and audits his pantry. He checks his supplies. He counts his reserves. He asks, what are they not telling me? What pain are they trying to postpone? And who will pay the bill? Why? Because the investor knows, has learned through study and experience and the hard lessons of history, that cheap money is the most expensive thing you will ever buy. It is not a gift. It is a loan against the future. It is paid for in the debasement of your labor, in the erosion of your savings, in the slow theft of your purchasing power. If the politician wins this fight against the central bank, if Powell is removed or intimidated into submission, if the Fed becomes an arm of the Treasury, if rates are set by tweet rather than by analysis, the speculator's delusion will be rewarded. For 6 months, maybe 12, the green candles will be magnificent. The headlines will declare a new era of prosperity. The speculators will post their gains on social media and mock the cautious. But the investor's discipline will be the only thing left standing after 3 years. When the inflation arrives, and it will arrive, because it always arrives when you print money and suppress rates,
The speculators will discover that their gains were denominated in a currency that buys less each month. They will discover that you cannot eat a stock chart. They will discover that nominal wealth and real wealth are two different things. Do not be fooled by the voting machine of the polls or the S&P 500's reaction to a presidential tweet. The market can stay irrational longer than you can stay solvent, but it cannot stay irrational forever. The weight of the debt is real, $36 trillion and counting. The weight of your responsibility as a provider is real. The mouths you feed, the futures you protect, the promises you've made. The speculator bets on sentiment. The investor bets on gravity. Gravity always wins.
How do we apply this brutal rationality to your life right now in this January 2026 fog of political warfare and monetary uncertainty? First, the real estate audit. If you are holding debt with a variable rate, you are sleeping in a room with a gas leak. The political pressure to lower rates feels like it's in your favor. Lower rates mean lower payments, right? Wrong. If rates are being held down by political coercion, they are unstable by definition. When the pressure releases, when Powell's successor proves less pliable than expected, when inflation forces the Fed's hand, when the bond market revolts, variable rates will spike, and you will be caught in the explosion. Fix your rate now. Lock it in. Pay the premium for certainty. Do not trust the promise of lower rates from a politician. A promise from a politician is a liability, not an asset. It is a claim on a future they cannot control, denominated in credibility they do not possess. Second, the frugality of the provider. In an era of canitatis, cash is a weapon. Not for the 2% or 3% interest it earns in a money market account. That's barely keeping pace with inflation. Cash is a weapon because of the optionality it provides. When the political intervention fails, and study history, it always fails, and Mr. Market swings from mania to panic, the man with cash is the only one who can act. The man with a paid-off mortgage and a pile of dry powder is not at the mercy of the market. He is not forced to sell at the bottom to meet margin calls. He is not trapped in a position he cannot exit. He is free. And in a crisis, freedom is the most valuable asset of all. Build your cash reserves to at least 12 months of expenses. Yes, 12, not 3, not 6, 12. In an era of fiscal dominance and political manipulation, the tail risks are larger than the models suggest. The man with 12 months of runway can wait out the storm. The man with 3 months is one unexpected expense away from catastrophe. Third, structural repairs. Look at your portfolio the way a building inspector looks at a house. Tap the walls, check the foundation, look for termites. If a company in your portfolio only survives because of cheap credit, if its business model depends on borrowing at 3% to fund operations that barely break even, it is a termite-infested structure. Get out. It doesn't matter how good the story sounds. It doesn't matter how charismatic the CEO. A company that cannot survive normal interest rates is not a company. It is a speculation on continued monetary manipulation. Find instead the companies with low debt
and high cash flow. Companies that generate more money than they spend. Companies that don't need the kindness of bankers to keep the lights on. Companies that could survive, even thrive, if rates went to 6% or 8%. These are the bunkers of the financial world. These are the fortresses that will still be standing when the glass towers collapse. Look for businesses with pricing power, the ability to raise prices without losing customers. In an inflationary environment, pricing power is the moat that protects your investment. A company that sells a commodity in a competitive market will see its margins squeezed by inflation. A company that sells something essential, something with few substitutes, something customers cannot live without, that company can pass inflation through to its customers and protect your capital. We are in a cycle of structural repair. The nation cannot be fixed with a pen, no matter how many executive orders are signed. But you can fix your household with a ledger. You can audit your own finances with the cold eyes of a Graham disciple. You can build a fortress that doesn't depend on the whims of politicians or the manipulations of central bankers. That is within your control. That is your domain. That is where you must focus.
At the end of the day, stripped of all the jargon and the formulas and the political theater, what is an interest rate? What does it represent at the deepest level? It is the value we place on our future. A society that tolerates high interest rates is a society that values tomorrow. It is a society that believes the future is worth waiting for, worth saving for, worth sacrificing present consumption to achieve. It is a society of planters who expect to harvest, of builders who expect their structures to stand. A society that demands lower rates by force, by political coercion, by criminal threats, by the weaponization of justice against independent institutions, is a society that has given up on its grandchildren. It is a society that wants to consume the seed corn today and let tomorrow starve. It is a society of locusts, not farmers. It is a society in decline, no matter how high its stock market climbs. I see this, and I choose a different path. I hope you do too. Our duty as providers, as the men and women who have accepted responsibility for others, who have taken on the sacred burden of protection, is not to get rich quick on the whims of a president or a central banker. Our duty is not to catch the next wave of speculation or front-run the next policy announcement. Our duty is to be the independent anchor in a world of drifting ships, to provide security for those who rely on us, real security, not the paper wealth that evaporates in a crisis, to look at the canetada with the cold eyes of an investigator and say, I see the lie and I refuse to participate, to build a fortress not of leverage and speculation, but of cash flow and equity and pricing power and discipline. There is a profound peace in fulfilling your duty, not the manic excitement of a winning trade, not the dopamine rush of a green portfolio day, something deeper, something quieter, the peace of knowing that while the world gambles on the stroke of a pen, your fortress is built on the rock of intrinsic value. The peace of knowing that you have done what you could with what you had in the time you were given. The politicians will come and go. Powell will leave in May one way or another. His successor will face the same impossible pressures. The markets will swing from euphoria to despair and back again. The headlines will scream of crisis and opportunity in equal measure. None of this is within your control. But your ledger is within your control. Your savings rate is within your control. Your asset allocation is within your control. Your refusal to be the mark is within your control. Time is the ultimate auditor. It is the weighing machine that cannot be fooled. It reveals the true value of every decision, every investment, every choice. And time, unlike the Fed chair, cannot be fired. Time cannot be threatened with prosecution. Time cannot be manipulated by executive order. Time will judge us all. The speculators will be weighed and found wanting. The manipulators will be exposed. The paper fortresses will collapse. But the provider who stayed rational, who stayed disciplined, who refused to participate in the delusion, that provider will still be standing. His family will be secure. His legacy will be intact. That is the only victory that matters. Stay rational, stay disciplined, audit everything. The rest is just noise.